to do these very things. But because everything has become so streamlined and efficient by artificial intelligence, AI, the effectiveness of algorithms, okay, that's been implemented now. It's much more efficient to do that, and there's no emotion. It just does what it needs to do. So if it's a computer program, or I'm quoting with my fingers now, the Interbank Price Delivery Algorithm, that computer program, we're going to call it from this point on for this teaching, for it to be effective, it has to know where to look at to find stops. They don't see orders. That's not what's going on. They don't see orders. The orders are executed on by the traders at the bank level. The algorithm just permits the price to move to that level, which gives the opportunity for the traders to execute on that run. That's the real story. That's what really goes on. Everybody else out there in this industry will tell you, well, it's this happening, and this guy here, he's pushing a button, and it's doing this to happen. No, it's not. It's not. That's not what's happening at all. The algorithm will look back 60 days, and it'll find, it's very easy. If you know anything about computer programming, and you don't even have to do that, but just look at this 1st of November. If you look back 60 days in the past, what was the highest high in the last 60 days? There's going to be buy stops above that high. What's the lowest low in the last 60 days? There's going to be sell stops below that low. In the last 40 days, what was the last highest high and what was the last lowest low? Looking back in the range to the left from that November red line that we're delineating in November, where are the stops below and above those highs inside of the range of 20 days, 40 days, and 60 days? Now, I already know what some of you are thinking. Well, what happens if there's a low that's really, really obvious, that's just outside the range of 60 days? That's the farthest extreme. That's when the open float will move aggressively and go outside that normal parameter of 60 days, and you'll see that big run. The market will jump and skip right down into that old low that's just outside that 60-day range. How do you know when it's going to be an explosive move, Michael? When you have that scenario. If in the last 60 days, if they've already ran out the stops below and low in the last 60 days, or above an old high in the last 60 days, and there is a larger, higher high or lower low where the stops will be resting above or below respectively, then you know there's going to be a big run on price, and they're going to run for that liquidity because that's the only other thing that's left. The large funds have their orders above and below these old highs and lows. You work just like the algorithm will in a 60-day range. Look back the last 60 days. And then you watch going forward. You cast forward 60 days. And you can literally have this on your chart. You go forward, count forward 60 days. You can literally go on your daily chart in MT4 and change your date 60 days forward to make a vertical line. And that way, as price starts to paint, you'll know you're approaching that 60-day. That means it's going to be forming some measurable intermediate term high or low before that time. And it's going to create a liquidity pool above an old high or below an old low. That's going to be influential for future trades. The same thing occurs by looking back on the last 40 days to the left of that November 1st. Look back 40 days. What was the lowest low? What was the highest low? I'm sorry, what was the highest high, rather, and the lowest low? Your buy stops above the old high and the sell stops below that old low inside of that range of 40 days. That's where IPTA will look for that liquidity. Now, it's not giving you directional bias yet. I'm telling you it needs to use these reference points to find where the stops would logically be. See, the AI can't think for a human. It can't do that. But because human nature says that we will, as traders, put our sell stop below a low, and we will put a buy stop above an old high. That's all the algorithm's doing. It's seeking to take price to that level. When it gets to that level, then your broker, then the central bank can do a wild spike and send it above 10 to 20 pips. Think about it now, 10 to 20 pips. Then it becomes logical why they do those big spikes, okay, intraday, 10 and 20 pips above an old high. Then it stops many times right at 20 pips or 10 pips and then rejects it, goes the other way. It first has to get to those levels based on a daily chart in the realm of a 20 pip, 20 day, 40 day, or 60 day look back and then cast forward.